Thursday, October 24th, quick one-up video for you wonderful ladies and gentlemen. Just a reminder, I'm back on YouTube, so be sure to follow me there. Also, for a limited time, I'm offering coaching sessions. If you want to level up your game or if you need help, I'm doing it for a short period of time for $100 an hour. If you're interested in that, or a package, I would do a deal if you want to buy, let's say, 5 sessions or so. Just DM me. Space is obviously going to be limited, and it's probably going to fill up quickly because I've mentioned it today and I already had a bunch of people message me about it. So jump on it if you want it. VIX is still not doing it for me. I've been waiting. It just cannot get itself over and stay over 1936. I'm actually going to put an alert over the high of day at 2024. I think if that clears, it could be to the upside. I'd be really surprised if before the election they give up 16s or 17s on any type of dump. Maybe post-election, but I don't think so before. As far as SPY goes, we broke the wedge to the downside and we are actually consolidating more by time than by price. We're still holding the 20 MA. I like that today had a higher low and it is a dubstep situation. And I mentioned in my live today, I'm doing those again, by the way. I'm doing the lives sometimes during the day, sometimes after the market close. But I see a very clear setup here in SPY. We're caught between the 20 MA and the 10 MA, so I think if we got over the 10 MA, currently 581.71, I think it could be a long, particularly if it clears yesterday's high at 581.71. Then I think we could press on up, maybe even back to the wedge high at 587.35, and maybe there is an assault on 600 before year end. On the other end, the dark side of the force, if we lose 576.57 and then we lose 574.42, so it would be the first trigger below today's low of day and a second trigger below yesterday's low of day. I think it's a clean liquidation break down to 565.16, which of course was the key breakout level from 716, and it lines up roughly with the 50 MA, which is currently 566.32. Similar situation in the Qs. They held the 20 MA today, and we are a little bit below the 10 MA. I'm going to be a little more particular in the Qs because they've been lagging. We know ES has been leading Qs, so we'll be a little bit tougher graders there. I need to see yesterday's high clear at 494.25. We're so close though, so if you want to use today's high at 493, I'm not going to stand on ceremony. And if that were to clear on the upside, I think we're making the run closer to 500. We tapped out originally here at 498.5. If we were to go up to the wedge high again, it is exactly 500. On the dark side, if we lose 489.44, and I guess you could use the 78.6 if you want, if you don't want to use the entire range, but 486.39 or 485.05, then I think there's a pretty clean liquidation break down to that 50-100 MA area, 480.07 down to 476.40 with a range low at 477.40, so I would be covering into all those levels. If we did get down to the next level before 73.82, and then you're talking 200 MA if those levels start breaking. I mean, by the time it got there, it'd probably be around the 50% fib at 463.49. I think the key here is, of course, going to be the big names, Apple, Nvidia, Google, etc., Meta for sure. I'm just watching this Apple situation unfold, and it to me looks like we had a mini look above and fail. Again, we're in this responsive market, not initiative. We get back up to these highs and there are no new buyers above. If they test it a little bit, same thing happened in JP Morgan, by the way. You started to see some of these earnings pops sell off a little bit here. I think you got a nice little dubstep setup here with Apple. If you want to take it over today's high at 230.82, I'm good with it. I'd feel better over 233 though. Really 232.92, but 233. If you start losing the 2-day low, meaning yesterday's big body candle when we had the big dump, 227.76, I think you could see a liquidation break. I mean, the 50 MA is right below there at 226.67, so I don't know if that would catch it. I think the 100 MA could, in that 221 to 220 area, that would be the next stop on the downside if there's a bigger, larger dump in NASDAQ. NVIDIA, I actually used the open today to book some NVIDIA because the market was up, Tesla booming, and you also had Lam Research. But I didn't love that it got down really deep into the 1021 candle. And it is still holding the 10 MA, so I'm not really that bearish just yet, 138.24. If that's lost and then we lose yesterday's low of day at 137.46, it would, to me, would be a confirmed look above and fail, and I think we'd come right down to the 20 MA and retested the breakout area in the 131s, and then we'd see 130 to 131s, and then we'd see. I think if we got over the 2-day high, and I have that alert set, I have those 2 alerts set, above the high of day from yesterday at 142.44 and below the low of day at 137.45, and I'm down to fill either way. It does start pumping up. Let's say we got up to the channel high, you're looking at the 150 to 151, depending on how long it took to get there. I don't know how many times I have to say this. If you're going to play gold, play gold. I way prefer GLD over the miners. The miners have operational risk. Look what happened with Newmont Mining today, and that's like the most well-known of all the miners. Just complete smackdown today. Yeah, I mean, gold still looks okay to me, hanging out near channel high. If it had a liquidation break, the 20 MA is close to the channel low at 246.63. I mean, if it did it tomorrow, I don't know that it would. You'd be at 245.72. Newmont Mining, oh my God, just a complete collapse today. But you held the 100 MA, so that's good. There may be a bounce. If it does, it's below the channel here. It could bounce up to like 50, 67. But I'd give this a few days to shake out. It could get down to 44.75, which is the 50% fib of the range. This was basically the breakout zone, though, between the 61.8 at 48.37 and 49.65. So we're into that zone. It may support here. I don't know that there isn't going to be further dumpage, but it is also possible that there's a little consolidation here. For me, though, I think Newmont would get more interesting if we got down to those 40s, 41s. I don't know that we're going to go that low, but I would probably try it for a trade in the 44s. If that didn't work, I'd play a move down to the 40s. I'm good with a 1/2 put ratio to get down there, but the problem is there's not going to be enough juice in there to make it make sense. As far as Bitcoin goes, the digital gold, I have been a fan largely, but not to chase, but to buy on pullbacks. It is still looking fine. I had told you guys, as long as it holds 66,233, we did 2 days ago, get below there, but we closed above, and then yesterday, which was bearish for the market, was just boom for Bitcoin. We are into a little resistance here. This was actually the November 2021 reference high at 69,355. If we were to keep going, I think you could get up to the 72,495 area. But for me, I'd probably be lightening up at 70,825, which was the 729 reference high. And yeah, at those 72,495s. Tesla, this was one we had talked about pre-earnings. Exactly what I thought could happen on an upside move did, and it actually happened even more. A couple of things to note. This was down on the robotaxi event and their deliveries, which were disappointing. The last time deliveries were disappointing, it got smashed on earnings. Tesla should have gone lower. We talked about this probably for a move down to the 200s or even below. But I did say if we got over 226.5, which is what it should not do, we would easily fill the gap and get the 238.77. And not only did we do that, we got way higher. You're into the 260s. I do see some resistance between 263.98 and 264.86, and of course the 271 reference high that we saw all the way back on 7/11. So what now? I think a pullback is okay as long as it holds 251.95. That's the 78.6 of the range. If that fails, I think it's way too much. That already would be a pretty healthy pullback, but Tesla, moves. That to me would be the maximum allowable pullback for me to remain long. Lam Research, I think the bounce today was really kind of minor. You didn't even get back up to the range highs in the 86s. I did close with a up move, but lack of momentum. I guess use low of day if you're long 74.45, anything above 77.48 probably just keeps climbing higher. This could be a creeper, so maybe keep an eye out for it. Kind of a disappointing move for a stock like Lam Research, which has been down so much. Microsoft, this to me is just really, really choppy here. Generally, we are bullish on Microsoft, but it really does need to clear and hold above that 430.82 level. We've seen resistance there the prior 2 days, so if it clears, you probably have a pennant fill all the way up to 441.50. On the downside, the range low has roughly been this 408 area to 410.48. I guess traders do what works until it doesn't, and if that were to snap on earnings, I think it will move on earnings. So over the 430.82, if it happens on earnings, that's like the Tesla 226.5. It's not going to probably move as much as Tesla because Tesla was definitely more shorted than Microsoft. And by the way, the reason Tesla beat was because battery prices were lower. So they got a little bit of help with the inputs there, and I don't know that that's going to be a recurring thing. I'm still waiting for Google to break above 169.44, which is the neckline. Today it did dump. I almost bought the dip at the 200 MA. I'm kind of close. I may do some kind of a call spread. Usually I sell a put spread and buy a call spread, but I may just do the call side here. Still to be determined. Meta's still acting pretty well. Usually Google and Meta go the same way on the first one to report earnings and then the opposite on the other. The channel low is 550.46. It's also 50 MA, so that to me would be a buy the dip spot. It does to me look like we hit the channel high and we're just pulling back to channel low. It's acting like it should and usually does. Generally speaking, we have a risk-reward situation now that is very different than when we were a lot lower. We are nearing the range high. I think the market is very susceptible to moves in interest rates and the dollar. If the dollar really starts getting over 105, I think the market's going to notice in a much bigger way. And if the 10-year gets up over and stays up over 4.25, I think it's going to 4.5. That could be a bit of salt in the wound as well. Like and follow for more.